This is our Forex blog for October 29th, 2013, and these are our currency indexes, which let you see visually what each currency is doing. For instance, you can see the dollar's trending up. It's finding support at its hourly moving average. It also tends to be bouncing off the upper containment bands, which is a very high probability reversal signal. And basically, in a nutshell, what you want to do is you want to buy the strong currencies first a week. The yen was strong, but you can see it clearly wasn't able to go above the previous high, and then it pulled back, found support at the previous day's high, came back up, couldn't break it. And so anytime a high level gets hit 2 or 3 times, it can't break, it's very likely to cause a downtrend. So at 5:30, 6 o'clock right here, you want to find a currency that is likely to go up to trade against the yen. Which one's strong? Well, the euro's not strong. The pound has been going kind of sideways, but the previous trend was down. The dollar's up near its highs, but it's not at the upper containment band, which tends to reverse price. So this might possibly go up here at 5:30 to 6. So let's bring up the dollar yen. Around 6 o'clock, we're looking for buys, and you can see that's exactly what happened. 6 o'clock, we have the high. It's kind of going sideways. You might wait for the high to be broken out because it's only a little bit above. You go long right here with your stop underneath the low here. And you know, the real secret to trading is having wins that are bigger than losses. This is your risk. This is, you know, you're never going to catch every pip, but you can see you made many multiples of what your risk is by using our tools, by seeing what each individual chart is doing. And by the way, a little bit earlier, the yen, you can see, was trying to go up. Really couldn't, you know, make higher highs. And then if it breaks underneath the previous low and also underneath the hourly moving average, you want to look to sell it. So right here, broke down. This is at 455. It's very likely, because the dollar's strong, and you can see it just took off, euro dollar at 455 is likely to go down. And you can see that's exactly what happened. It was kind of trending down, rallied up. It's at its lows. Here's the previous swing low right here. You go short when it breaks this little flag pattern, and it falls another 15 pips. And what's nice about using the currency indexes, not only can it help you find trades sometimes 5 to 30 minutes ahead of time, but usually when you do make new lows, you want to look to sell the next pullback. And it, you know, it doesn't always only go down 5 to 10 pips. Sometimes it goes down significantly more. And you can also use our currency signals, Forex signals, to trade it. Here's the euro dollar. You can see most of these signals generate, you know, some kind of movement afterwards. Yeah, this one's tiny, tiny, tiny. But most of these trades at least go some direction that way. This one here is kind of a failure. Small win, nice win, nice win, loss, followed by another entry on the short side that, you know, was huge, 30 or 40 pips. You know, when the market's chopping around, and this is made up of over 100, probably about 140 different signals that are all rare, and they all tend to predict, you know, what's going to happen in the next 5 to 20 minutes. And some of those directional changes, you know, last over the next couple hours and make 20, 30, 50, sometimes 100 pip moves. The currency indexes are the easiest way of trading. Let's take a look at some of the other ones. You can see the Australian, extremely weak all day. The CAD, very strong all day. So looking for sells in the Australian CAD makes a lot of sense earlier in the day, especially, you know, before 5, which is all we could see. You're looking to sell the Australian versus the strong CAD. And, you know, if you're a short-term trader, you have a lot of tiny little wins here. This one here was the biggest one. And, you know, the market doesn't always give you 20 to 50 pip wins on every move. And you can also use these on multiple time frames. For instance, if you are a longer term trader, you can, instead of using a 5-minute index, use maybe an hourly index. And here you can see the longer term trend of the CAD is down, and You can draw fibs on it, trend lines on it. You can see that the high today was a 38% retracement. So at about 8 o'clock today, the CAD is likely to go down. So, by seeing multiple time frames, you can trade short-term scalping and find 5 to 30 pip moves, sometimes 50 pip moves over and over throughout the day, or you can trade and use this on a longer-term basis as well. So at 8 o'clock, we know that the euro was strong longer term, that the CAD is weak. 8 o'clock, the euro CAD is very likely to go up. And when you use longer time frame methods, you can see at 8 o'clock right here, you look for a buy, it went up 10, 20, 30, 40, 50, 55 pips. And if you're just a short-term trader, you might, ride this up, buy this little pullback here. This is your risk. Big win, tiny risk. And so whether you're a short-term trader or a long-term trader, you can use the currency index. This works on, 1-minute charts, 2 minutes, 3, 4, 5, all intraday charts actually, daily, weekly, and monthly. And we are statistically comparing all the different currencies. When you see one currency that's strong, another one that gets weak right here. This one is, going weak here at 4 o'clock. Let's find another currency that might be strong at 4 o'clock. The dollar, was strong. So when the Swiss breaks down at 4 o'clock, one of them that would be excellent to be buying would be the dollar Swiss at 4 o'clock. And like I said, a lot of times you'll see one or two trades in that direction. 4 o'clock comes. This has a little flag pattern right here after going up briefly. Breaks out. And again, anytime you buy a breakout or a little pullback, you put your stop underneath the low. You're never going to catch every pip, but you might catch 70% of it. And when wins are consistently bigger than the losses, you're going to tend to make money trading. You buy this pullback here because, like I said, most trends tend to go at least 2 waves. And again, you put your stop underneath the low, and you can see this one, went up a little bit, kind of went sideways. And even in this instance, the win was at least as big as what your risk was. Sometimes you're going to have break-even trades. Once it goes up a little bit your way, you move your stop in half or to break even. And when it's going sideways right here and it goes up again, you move your stop up. In trades that aren't really working out, you can still make 5 or 6 pips in most cases if you're a short-term trader.